Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy on the stock market right now, according to stock picking experts, the 1%, and of course hedge funds. All of the stocks that we are going to go over are all fantastic buys according to analysts, and I personally have even signified my personal 3 favorite stocks out of these 10 stocks with a check mark next to it, and those are the stocks that I am buying. Now, if some of these stocks are out of your price range, I would suggest that you find a brokerage where you can invest into fractional shares. So if the share price is around $150, I can literally choose to invest only $1 into that stock. Now, if for some reason you don't have access to brokerages that offer fractional share investing, then you really need to selectively pick the best couple stocks that you can afford from this list. Now, although all of these companies are fantastic investment opportunities, I personally have a check mark next to my personal favorites that I am doubling down on because of the fundamentals and the financials of these companies. These videos take me a very long time to research and actually make, so if you could go and smash that like button right now for more videos like this one, subscribe if you are new, comment down below your favorite stocks to buy, and without further ado, let's jump right into today's video. So our first stock that we're going to start off talking about is Twilio Inc., ticker symbol TWLO, and of course, you all know that Twilio is one of my personal favorite stocks, which is why it has a red check mark. The current stock price is currently around $154 per share. The low-end analyst price target for the company is $200, and I always love seeing that the current stock price is trading below the low-end analyst price target because this gives us a fantastic margin of safety, and of course I always like being safe when I invest, especially if I'm trying to build long-term wealth. Now, the average price consensus among analysts is $331 for this company, while the high-end price target goes all the way up to $550, and remember, these are 12-month price predictions, so technically we could more than 3x our money here if the most bullish price target is correct. However, I personally tend to gravitate more toward the lower price targets because I am a more conservative investor in my personal price targets. Right now, around 35 analysts cover this stock, with 32 of these 35 analysts saying that this company is a fantastic buying opportunity right now, while only 3 analysts say to hold the stock. Also, we're going to look at the dividends for these companies, and right now the dividend is 0.00. If you didn't know, Twilio offers a cloud communications platform, which enables various developers from a plethora of different companies to build, scale, and even operate their own real-time communications software applications that operates through Twilio's cloud communications platform. They have fantastic customers, which would include Uber as well as other companies such as Airbnb, and this is why Twilio out of these companies is one of my personal favorites, which is why it has a check mark next to it. Now, our next stock is actually going to be Booking Holdings, ticker symbol BKNG. Now, this company is a provider of both travel and restaurant reservations, where you can book a range of various accommodations, including hotels, motels, resorts, homes, apartments, bed and breakfasts, including other things such as car rentals, airport taxi services, or even to make dinner reservations, or you can even use this company to make dinner reservations, cruise reservations, flight reservations, vacation packages, and the list just goes on and on. Right now, the current stock price for this company is $2,250 per share, while the low-end analyst price target, apparently according to Webull, is $235, but I think this might actually be a mistake that they left off a zero, making it $2,350. However, the average price consensus for this company is $2,580, while the high-end price prediction is $3,300 per share, and again, these are 12-month price targets. Right now, 35 different analysts and professionals currently cover this stock, with 22 of these analysts actually saying to buy the company, 12 of them, which is a good amount, saying to hold the company, while one of these analysts actually say to sell. And of course, just like the last company, this company offers a dividend of 0.00. I also want to mention that every time we move on to our next stock, which in this case is going to be Square, now called Block, ticker symbol SQ, this indicates that more hedge funds, professionals, the 1%, and stock investing experts own more of this company than the last stock that we previously looked at. Again, we have a check check mark next to this company because I am a huge fan of Block. If you didn't know, Block, which was formerly called Square, is a full-fledged technology company that specializes in financial services. It basically has built tools to help small businesses receive payments, and they also own Cash App. This allows people to send, spend, or even invest their money into stocks or even cryptocurrencies, specifically Bitcoin. And I personally like that about Block. The current stock price is only $128 right now, while the low-end analyst price target is $110, so ideally, in my view, we would want to buy below $110 for Block. However, in the long run, I really don't think it's going to matter much because this is a very solid company in my personal opinion, which is why it has a check mark next to it, and it's why I personally am doubling down on this company. The average price estimate for the company among analysts is $182 for the next 12 months, while the high-end, most positive bullish price target goes as high as $310 per share. Right now, a load of analysts are following this stock, and that number is 48. So 48 analysts currently have initiated coverage on this company, with 37 of these 48 analysts saying that this company is a fantastic opportunity for an investment, while 9 analysts are not as bullish and they just say to hold the company. And then moving on, we see 2 analysts actually saying that this company is a sell, and that investors should sell the company, but I clearly disagree with those analysts. Also, Block has a dividend of 0.00, which is basically saying they basically have no dividend, so this is a growth stock. This is not going to be a stock for dividends or passive income. However, dividend stocks as well as growth stocks will be included in this list, and our first dividend stock is going to be JP Morgan Chase & Co., ticker symbol JPM. The current stock price for JP Morgan Chase & Co. is $140, while the low-end analyst price target is $125. The average price consensus among analysts is $171, while the high-end price target is $200. The dividend yield is very strong in my opinion, coming in at 2.72, which to me is very good, and I personally do own this company mainly for the dividend, on top of also having good stock price appreciation. If you didn't know, JP Morgan is a financial holding company which is involved in investment banking, various financial services, and asset management. However, what do analysts think of this company? Well, right now, 29 analysts cover the stock, with 14 of them saying to buy the company, and 13 analysts, surprisingly, actually say to hold the company, which is higher than I thought. I thought more analysts would be bullish on this company because JP Morgan actually has their own set of analysts, and 2 analysts say to sell the company. However, overall, I would say this is a very solid company because they have strong leadership, they have good stock price appreciation, and they have a strong dividend, in my opinion. So if you're here for a dividend stock that has decent growth, then JP Morgan Chase could be an investment that you should look further into. Moving right along here, the next company we're going to talk about is the Walt Disney Company, ticker symbol DIS. If you didn't know, Walt Disney is an entertainment company that has worldwide reach, and this company operates in 4 main business segments. They have their media networks, their amusement parks, they offer experiences and products on top of their studio entertainment, and their direct-to-consumer and international business. This would include things like streaming services, movies, merchandise, theme parks, resorts, cruise lines, and even vacations. They also make a lot of money from their merchandise and even soundtracks, mainly coming from their movies. And right now, the current stock price for DIS stock is $138, while the low-end analyst price target is $132. The average price estimate for the company in the next 12 months is $188, while the high-end price prediction is $229. At this current time, 33 analysts have initiated coverage on Disney stock, with 25 of them saying to buy and 8 of them saying to hold, while none of them actually said to sell the company. Now here I am surprised that more analysts actually don't say to hold this company, because although I like Disney, I don't own Disney as much as the other companies on this particular list, and if you didn't know, this company as of right now does not offer a dividend. And you may find it surprising that the next stock on our list is actually owned by more hedge funds than Disney, which is Netflix. However, the stock price recently has absolutely plummeted. Right now, Netflix trades at only around $368 per share, which is substantially cheaper than it was trading at just a couple months ago. If you didn't know, Netflix is a major streaming entertainment services platform, which is eventually going to incorporate video games on their platform. The company, however, is most known for their streaming platform, which is available in over 190 countries. The low-end analyst price target for the company is $330 per share. The average price estimate among stock experts is $509, while the really positive price prediction is $735. 45 analysts cover this company, which is a good amount. However, only 20 of these analysts say to buy the company, 18 of them say to hold the company, and 7 of them actually say to sell. The reason why so many analysts are saying to either hold or sell this company is because the streaming services segment of Netflix is under attack from companies like Disney and Amazon and even HBO that are really upping their game in terms of what they're offering for their respected streaming services. So only time will tell if Netflix can hold on to their market leader spot in this space, because if you didn't know, Netflix right now is the market leader in the streaming space, and hopefully they can maintain that dominance in the market. And if you think so, this might be a good stock to buy, or at least a stock you should look further into. And of course, this company offers a 0.00 dividend, so this is going to be another growth company and not a dividend stock. Our next company is owned by none other than Warren Buffett. This is literally Warren Buffett's company, and it's called Berkshire Hathaway. Some people pronounce it Berkshire Hathaway. However, the ticker symbol for the one that we are reviewing is going to be their B shares, so it's ticker symbol BRKB. If you didn't know, Berkshire Hathaway is a holding company that has a multitude of subsidiaries, and he actually uses Berkshire to buy other companies. These subsidiaries and other companies would include companies that are involved in insurance, utilities, energy, freight, rail, transportation, manufacturing, retail, and a plethora of other segments. However, what's misleading here is that the current stock price is $356, the low-end price target is $327, the average price prediction is $345, and the high-end price is $364. 5 analysts currently cover this stock, with one of them saying to buy while 4 say to hold, and none of these analysts say to sell the company, and of course this gives us a dividend of 0.00, much like the other growth stocks on this list. However, right now in the video, we are going to go slightly more risky by talking about a foreign stock, mainly Alibaba Group Holdings Limited, ticker symbol BABA. If you didn't know, Alibaba is a Chinese company, and they are a technology infrastructure and marketing company that helps merchants, brands, and other businesses leverage the power of new technologies and the internet to engage with other users. Basically, they are the Amazon of China. And right now, it's trading at a substantial discount, only around $112, due to the geopolitical tension between the United States and the East, specifically China. The low-end analyst price target is $99. The average price consensus among professionals is $186, while the high-end price prediction is $314. This company also has very good analyst backing, because 48 analysts currently cover the stock, with 39 of them saying to buy the company, 6 of them saying to hold the stock, while 3 of them actually say to sell for the reasons that we just talked about. And of course, this company does not give a dividend to its investors. Moving right along, we're going to talk about another foreign stock. However, I like this company a lot, but it doesn't deserve a check mark right now, and that is Sea Limited, ticker symbol SE. Sea Limited, if you didn't know, is an internet company. It's a consumer internet company that operates in 3 main business segments. They have their digital entertainment segment, their e-commerce segment, as well as their digital payments and financial services fintech segment. And I really like the diversity in the revenue streams for this particular company. However, this is a foreign company. The current stock price is very cheap, only at $116, especially compared to other stocks on this list. The low-end analyst price target is $110, the average price consensus is $227, and the high-end price prediction is $400 per share. And again, as a reminder, this is just in the next 12 months that they could reach these price targets. Now, these price targets are just projections. We should not take these as law, as if the stock price will actually reach all of these price targets. These are just based on either free cash flows, net income, and a plethora of other financial and fundamental metrics that analysts are using to come up with their projections. Right now, 27 analysts cover the company, with 25 of these analysts saying to buy the company, which means that this is a good company to buy, and only 2 of them say to hold, with none of these analysts saying to sell the company, and of course the dividend is $0 per share. Now, for our final stock in this video, we have a a red check mark, which is again means that I like this company compared to all of the other companies on this particular list of 10 stocks to buy right now, and that is going to be Salesforce.com Inc., ticker symbol CRM. And Salesforce basically focuses on customer relationship management technology. They also specialize in cloud, mobile, social analytics, and artificial intelligence, which just makes their platform even better. And this is extremely popular among a multitude of commercial enterprises right now. I personally love this company. I am heavily invested into this company, just like the other companies on this list, but I do like to highlight the companies that I really like, and I do that through that red check mark right there. The current stock price trades at $209. The low-end analyst price target is $211. The average price consensus is $295, and the high-end price estimate is $385. 51 analysts currently cover the stock. 43 of these analysts say that this company is one of the best buying opportunities in the market right now, and 8 of these analysts say to hold the stock. And of course, this dividend is 0 like many of the other stocks on this list because this is a growth stock company. Now, if you missed our last video, we went over another 10 stocks that analysts are buying, that stock professionals are buying, that hedge funds are buying, and the top stocks that the 1% are buying. So for more videos like this one, remember to go and smash that like button. Remember to check out the video before this one if you didn't already. Subscribe if you are new, and I'll see you in the next YT video.